Assalamualaikum guys.
Oh, salam. Hi.
How are you guys doing these days?
Well,
I'm
alhamdulillah.
great
Good.
these days. Why do you look so stressed?
Did you know about the Bursa Market simulation game?
Yes,
Of course, we know
Of course,
it.
we know about
Of
it.
course.
I check it every hour.
Wait, what's going on with the Bursa Market Simulations game?
It's insane! The market being fluctuating like crazy. I have been glued to my screen trying to manage my virtual portfolio.
Tell me about it. I've been feeling the pressure too. It's like a roller coaster ride, even though it is only imaginary stuff.
Seriously, it's addictive. I found myself checking it every spare moment I get. It's hard not to get caught up in the excitement.
I have been meaning to check it out, but I didn't realize it would be this much of frenzy. My guess Malaysia stocks, it's all going right.
Yes, I also experienced with the same thing, but with Ajinomoto. From 90 to 15, I'm sad.
But you know what they say? High risk, high reward is all part of the game, right? So
Yes.
buy CCK guys, buy CCK.
Yeah.
Yes, right.
Well, I'm definitely convinced now. Maybe I will have to give it a try myself, although I'm not sure if my heart can handle it.
Just be prepared for some late nights and a few nail biting moments. But hey, that's what makes it exciting, right?
Absolutely. And who knows, you might even discover a knack for trading you never knew you had.
That's the spirit. Welcome to the world of virtual trading, where every decision could make or break your fortune.
By the way, do you guys notice that nowadays the prices of goods are on the rise?
Yes, I have noticed that these days the price of goods are increasing, possibly due to inflation.
I just wonder what exactly caused the price of goods to increase during inflation, and are there different types of inflation we should know about?
Well, from my understanding, inflation can be triggered by various factors, but one of the main culprits is the increase in the money supply. So when there's more money in circulating in the economy, consumers have more purchasing power, leading to higher demands for goods and services. So this increased demand puts pressure on prices, causing them to rise.
I agree with that. And as the economy strengthens, employment tend to rise. So as more people go to work, they make more money and they want to spend more money. However, if goods are limited at a time when people are willing to spend more money, competition among consumers drive prices also to go up. So economists often refer to this type of inflation as too many dollars chasing too few goods.
Oh, choke guys, do not forget about cost push inflations. This type of inflations occurs when production costs such as wages or raw materials go up. When business face higher costs, they often pass them on consumer in the form of higher price of goods and services. Cost push inflations is usually associated with unexpected external events like natural disaster, depletions of natural resources, monopoly, government regulations, government taxations, and change in exchange rates. Basically, it's an event that hinder a company's ability to produce enough of certain goods to keep up with consumer demands. This forces them to rise or inflate prices.
Oh, by the way, guys, I have recently invested in some stocks. I'm really excited about the potential for growth and earning some extra income.
That's awesome! Investing can be a great way to build wealth over time. But in the current situation of inflation, have you thought about how inflation could impact the investment?
Honestly, I haven't really thought about that. So, how does inflation affect investments?
Well, we discussed earlier, inflation refers to the increase in prices of goods and services over time. So when inflation is high, the purchasing power of money decrease. This means that the same amount of money will buy fewer goods and services. This can erode the purchasing power of your money. So while your investment may be growing, if the rate of inflation is higher than your investment return, you may actually be losing money in real terms. Illiquid assets such as stock, bonds, or other assets that are difficult to sell or exchange for cash without suffering a significant loss in value.
That makes sense to me now. How about you give me an example on how this inflation can impact my investments?
Okay, for sure, we know that the rate of inflation measures how quickly price rise over time and how quickly investment lose their true worth. Let's say I assume that this year the annual inflation rate would be 10%. I want a hamburger that costs me 2 ringgit. Therefore, 10% inflation means that next year the same burger will cost 10% more, which is 2 ringgit 20 cents. Imagine how much you will pay for one piece of hamburger in the future if this inflation continuously increases and the price of the items become too expensive. So with this concept or understanding, investors will try to buy investment product with return that are equal or greater than inflation. To give you a clear picture on this, if I buy stock that the return is 4% and inflation is 5%, then the real return on investment would be minus 1%, which is a loss for me.
Or, let's say you invest in a bond that pays a fixed interest rate of 3% per year. If inflation is running at 4%, the real return on your investment is actually negative because the purchasing power of the interest payment is being eroded by inflation.
That doesn't sound good. So it seems like inflation can affect almost all kinds of investment instruments. So what strategies can investor like I do use to protect my portfolio from inflation risks?
For me, an effective strategy is diversification. In uncertain times, spreading your investments across different asset classes can be a game changer. By not putting all your eggs in one basket, you can mitigate market risk. One effective tool for diversification is mutual funds. These investment vehicles pool money from multiple investors to invest in a diverse portfolio of stocks, bonds, and sometimes cash.
Another strategy is to allocate investment towards assets that historically perform well during inflationary periods. Think commodities like gold or tangible assets such as building. This asset class has intrinsic value and provide consistent income through dividend. It often acts as a good inflation hedge since there will always be a demand for homes regardless of the economic climate, and because as inflation rises so do property value, and therefore the amount a landlord can charge for rent. These investments have the potential to increase in value in line with inflation and help to preserve the purchasing power of our money.
Absolutely, guys. Commodity like gold serve as a reliable hedge against inflation. I remember in 2021, I purchased gold at Public Gold for I think 256 per gram. Now it's valued at 382 per gram, marking a significant 33% increase.
That's incredible. Considering the current market trends, it seems like gold's value is only going to rise further. Just imagine the returns for investors who have staked more than a kilogram in gold.
Wow, it is interesting how different assets respond to inflation. I recently come across Warren Buffett's view on real estate being a solid investment during inflationary periods. He advised investors to approach real estate investment with a long-term perspective. He suggests that investors should seek properties with strong intrinsic value. During a period of uncertainty, Buffett recommends maintaining a conservative approach and avoiding excessive leverage.
Oh, and I also heard that he is cautious against overextending oneself financially, as this can increase risk and vulnerability to market volatility. Instead, he encouraged investors to focus on acquiring properties with solid cash flow potential. Buffet highlighted how real estate can be a good hedge against inflation because once you make the initial investment, you are not constantly pouring more capital into it.
Exactly. With real estate, you make the purchase and it tends to hold its value or even appreciate over time, making it an attractive option for investors seeking to protect their wealth from inflation.
Guys, have you heard the latest news about EPF? They just announced this new flexible account where depositors can withdraw their money whatever they want. What do you think about it?
Oh, really? I didn't know about that. Can you explain more?
Yeah, sure. The EPF or Employee Provident Fund has announced a restructuring of its member accounts effective on 11 May 2024 that seek to enhance their income security after retirement while addressing members' current life cycles needs. Member account will be restructured from two accounts, the first one, account 1 and account 2, to three accounts, which is accounts persaraan, to a cumulative saving that will serve as income during retirement, account sejahtera to address life cycles need that contribute to well-being during retirement, And the last one would be account flexible, a new account that provides flexibility for short-term financial needs. Saving in this account can be withdrawn at any time according to members' needs.
But why does EPF want to restructure this account?
Okay, so their EPF Chief Executive Officer Encik Ahmad Zulkarnain on said, the main focus of the EPF account restructuring initiative is to empower members in making decisions to balance future needs for retirement between short, medium, and long-term financial needs. This initiative will also help increase members' retirement savings so that they will have sufficient retirement income to sustain their needs after retirement.
That's a good point. But how will new contribution be allocated into the three new EPF account after the restructuring on 11 May 2024?
From what I've read, all contributions after 11 May 2024 will be allocated into new accounts in the following manners: 75% into account persaraan, 50% into account sejahtera, and 10% into account flexible. So between 11 May 2024 and 31st August 2024, members will have a one-time option to transfer part of the saving balance in their account sejahtera as an initial amount to account flexible. So if the member does not choose to option in for an initial amount, no transfer will be made and the existing balance will remain in account sejahtera.
I also heard that account flexible will also start with new contributions that will be credited into the member's account after the implementation date. If the member chooses to opt in for an initial amount, the transfer of the initial amount to account flexible and other account is based on the balance in the member's account sejahtera on the date of the opt-in application is made. Members can also make withdrawals from account flexible at any time for any purpose, subject to a minimum withdrawal amount of 50 ringgit.
But I have been wondering for some times, how do you think this will affect the economy, especially in the term of money supply?
Interesting questions. Well, I think if people have more access to their EPF saving, it's likely that there will be an increase in spending. With this new flexibility, depositor will have the freedom to access their funds whenever they need it rather than having to wait for a specific withdrawal period. So this increased liquidity in the hand of consumer could lead to higher spending and investment, which in turn could stimulate economic growth.
Exactly. And with increased spending, there is a higher demand for goods and services. So this could potentially lead to a boost in economic activity, which sounds positive. But I'm also curious about the impact of inflation. Do you think this could fuel inflationary pressures?
That's a valid concern. This increased spending could also lead to an increase in the money supply as more money is circulating in the economy. So it's possible that demand pull inflation could kick in. When demand for goods and services outpaces supply, producers may respond by raising prices, leading to inflation. So in that sense, the flexibility offered by the EPF could indeed contribute to inflationary pressures.
But guys, do you think this will change the impact on the investment landscape here in Malaysia?
As far as we are aware, individuals can now choose to withdraw up to 10% of their whole EPF balance from their flexible account. Some consumers now have the option to allocate a portion of their funds to stocks or shares. They can make use of the chance to invest from the recent establishment of Account 3 EPF. However, after that, in order to facilitate withdrawals, the EPF's implementation of Account 3 may cause the fund's investment portfolio to be shifted to highly liquid assets. Given that highly liquid assets frequently offer lower returns, this would therefore have an impact on the fund's investment performance. Bank Muamalat Berhad Chief Economist and Social Finance Head Dr. Muhammad Afzal Nizam Abdul Rashid said, the pension fund might need to keep highly liquid assets in its portfolio to meet the possible withdrawals from Account 3.
That's good to know, guys. It seems like staying informed about the economic trends and adjusting our investment strategy accordingly is a key to navigating the impacts of inflation.
Absolutely. It's important to stay vigilant and adapt to changing market conditions to protect and grow our investment over the long term.
It's always good to have this conversation and share knowledge with each other. Let's continue to support each other in our financial journeys.
Yes, let's do that.
See you again.